Fed officials, they remain laser focused, reining in inflation. But what is the economy saying on the potential future path of the Fed's policy moves? Here to discuss, we've got Abigail Watt, who is the Aberdeen U.S. research economist. Great to have you here with us this morning. Abigail, as we think about how many months a trend are going to be necessary to show a trend for the Fed, I mean, what does that calculus look like to you? And by when could we start to see that actually formulating so that the policy pathway that they've been on starts to pivot?
Yeah, so I think we did see progress, in particular in some of the metrics that the Fed is very focused on in the latest print. We saw shelter prices, which are a very big component of core CPI, coming off the boil a little, increasing by less than they had been. And I do think that's a very positive sign for the Fed, and we expect that those kind of prices will be peaking by the summer of this year. I think what's more concerning is perhaps the non-shelter core inflation. And I think that's the area that the Fed is really going to be looking for kind of further progress before they declare that the inflation issue is kind of dealt with.
And so then what happens as we look to the Fed meeting next week and beyond? It sounds like you think we're at least going to get that increase next week, which is indeed market consensus right now. But then what?
I think it's a really good question. Obviously, last meeting, a lot of the focus was on the stability of the banking sector and how that kind of interplays with the ongoing inflation issues and the fight against inflation that the Fed has. I think this meeting, we are expecting that 25 basis point hike. Our expectations is that this will likely be the final hike in this cycle. I do think one of the things that we're watching really closely is the labor market. Our expectation is that we begin to see the labor market rolling over more significantly. And we do need to see kind of some of those wage pressures coming off the boil as well in order for us to kind of have a very strong conviction in that final 25 basis points at next week's meeting. Ultimately, though, I think the more interesting area in terms of, I guess, contention for the Fed is that cutting cycle, and the market currently pricing around 50 basis points of cuts by January 2024.
Even if this is the final hike in the cycle, it then comes down to what their messaging looks like. What are you expecting there, as the market is going to continue to react to every single word that the FOMC chair, Jay Powell, has to put out there for the markets to ingest and really get a picture of, okay, how is the Fed perceiving its actions have been ingested or digested by the economy?
Yeah, I think it's a really it's always really critical that the messaging that comes out of these meetings is almost as important as the policy decision itself. We would be looking to see, I think, the Fed be fairly balanced at the meeting next week. I think they'll be stressing that data dependence. As you say, they're watching really closely to see how their policy decisions are affecting the real economy, and so I think they'll be watching really closely the kind of incoming data. I do think they'll likely try and push back against the view of kind of cuts that are priced into the market. We actually would endorse those. We're expecting a US recession later this year, and we think that the Fed will have to loosen policy into that. I think the other element that might be interesting in the Fed meeting next week is whether they comment on the interesting insights from the minutes, where we saw the staff at the FOMC actually began to kind of forecast a mild recession in the US off the back of the banking sector turmoil. So that's something that I'm looking for in terms of whether there's any comments around that in the press conference.
And Abigail, how do we know if the recession is here or if it's imminent, right? When you talk about the data and watching all the data, how do we know? What are going to be the key things that you're going to be watching that could potentially be signals?
Yeah, so I think we saw quite a strong set of PMIs last week. I think seeing those PMIs begin to roll over again is something that would be pretty critical to us being in a recession. I think we also need to see kind of the labor market data beginning to roll over. I think if we begin to see kind of slowing jobs growth or outright kind of cuts in jobs in the US economy, I think that's a pretty significant signal that things have kind of tipped into recession. I think one of the other things that is worth watching is claims. We have seen claims ticking up, but they're not yet at recessionary levels. And so those are a couple of indicators that I would expect to turn over if we were in a recession.
How likely is it that consumers are going to be fed up before we even get to a recession? I mean, we've been talking about a recession for north of or at least around about a year now.
Yeah, I mean, I think you can make the argument that there's been somewhat of an industrial slowdown so far. You've seen industrial production being fairly weak, but you've seen the consumer kind of holding up actually reasonably well. It's interesting, consumers generally have been less confident given inflationary pressures. But if you look at the actual consumption data, US consumption has been pretty robust through that period. So I think there's a little bit of a mismatch there. And it could be the case that ultimately you start to see kind of as wage growth is slowing, inflation pressures are still kind of around for those kind of key goods that goods and services that consumers are demanding. You could start to see kind of some clearer slowing in kind of consumer spending, in particular through kind of Q3.
Abigail, thanks so much. Appreciate your time this morning. Abigail Watt is Aberdeen U.S. research economist. Thanks.